Hey everyone, welcome back to Corporate Decoder, the place where we make sense of corporate filings. Today, we're diving into KFORCE's latest 10K report, their annual financial checkup. Get ready for a roller coaster because it seems like even talent agencies have trouble finding the right talent to manage their numbers, maybe even hire the right decoder. Alright, let's get into it. KFORCE, a company that specializes in staffing, specifically in technology and finance, had a mixed year. While they pride themselves on connecting talented experts with leading companies, their own financial performance faced some headwinds. For the year ending December, KFORCE reported revenue of $1.41 billion. Sounds like a lot, but it's actually down 8.3% from the previous year. The decline was primarily in their technology and finance and accounting segments, and a big reason for that was the ongoing uncertainty in the economy. People were being careful with their investments, which then had an effect on them. Breaking it down, their flex revenue, which is basically temporary staffing, also took a hit, decreasing by 7.9%. Their technology staffing took a small hit of 6.4%, but their finance and accounting suffered a bigger drop of 23.5%. Even permanent placements or direct hire services went down a steep 24%. To add to the challenges, their gross profit margin, basically how much money they make after subtracting the cost of providing their services, also decreased. It went from 27.9% to 27.4%. A lot of that was thanks to the lower revenues from their direct hire area. Even though revenue and profits were down, the company kept a tight lid on their general and administrative expenses, which increased only slightly. They managed to keep things relatively stable. Ultimately, net income, or the real profit that the company gets to keep, went down 17.5% to $50.4 million. That translates to $2.68 per share, compared to $3.13 the year before. Despite the revenue and profit declines, KFORCE was committed to returning money to their shareholders. In 2024, they handed out $64.7 million through stock repurchases and dividend payments. Digging into the details, KFORCE is focusing on a few key strategies to turn things around. These include streamlining their back-office operations, an integrated strategy, and evolving how they deliver services through nearshore and offshore capabilities. The last one was done to make sure costs stay down to maintain profit levels. One big step is establishing a development center in India to support project engagements with U.S. clients. It's expected to improve service offerings and meet client needs wherever they are and keep costs down. Of course, all these efforts cost money. The company will make significant investments as they finalize designs, continue build, and perform tests. The biggest risk factors for KFORCE revolve around the economy. The company is exposed to changing economic and employment conditions. If the U.S. economy turns sour, it is likely their services will drop. Other concerns include potential cybersecurity breaches, immigration law changes impacting their ability to hire foreign nationals, and the risk of independent contractors being reclassified as employees. It is important to note that KFORCE works as a subcontractor to the U.S. federal government. Losing or having facility security clearances suspended would lead to a reduction in revenue. The good news is KFORCE seems to be aware of these risks and are attempting to mitigate them. But there's never any guarantee things will always work out. The report also mentions the importance of well-being for KFORCE employees and consultants. This may seem a bit unrelated, but given the fact that that is what their business provides, they must take care to ensure their image is solid. Another thing to note was AI. KFORCE mentions that it is likely to expand AI capabilities to improve. However, that introduces risks including dependency on accurate AI performance, data privacy security breaches, workforce disruption, and potential infringement. If KFORCE fails to maintain sufficient oversight as rapidly as AI changes, it may negatively impact operations. So, what's the overall take on KFORCE? The company seems to be sailing through a difficult economic patch and trying their best to continue improving profitability. On the bright side, their commitment to returning capital to shareholders is always good, but this may not be enough. The investments they're making in new strategies, such as expanding to India and improving technology, could pay off in the long run. But those strategies also carry risks and uncertainties that could make it difficult for them to adapt to changes in the business. The next year will be very important for KFORCE since they must show an increase in revenue, and those strategies should start to have impact or else they will fall behind. Thanks for tuning into Corporate Decoder. If you found this helpful, please like, subscribe, and hit that notification bell so you don't miss our next analysis.